You can see the sun popping up behind me. It's just reflecting the 5 o'clock hour here. We're getting up. Got a little shot of something in my coffee to get me going. Anybody ask one curious what that might be? Nope, nope.
And Jodah's going all ASMR on us right now.
You can't hear me?
No, I can hear you. I can
Yeah.
hear you slurping your coffee.
Oh yeah. Oh yeah.
Anyways, we have a guest here. Derek, do you want to introduce yourself to the audience?
Sure. Hi, everyone. My name is Derek Albanese. Quick TLDR, I guess. Originally from New York. Worked early on in my career in investment banking. Sort of before and after business school. After that, spent many years in the private equity business. And during those years, I often stepped into a lot of portfolio companies to help the businesses operate while we ran them and owned them. Got into tech, so I've sort of been CFO of a couple of different SaaS businesses. Been in crypto officially since 2016 when I bought my first Bitcoin. Spent a year frustrated with my gold and silver investments.
Are you a billionaire yet with your Bitcoin? Or how's that working for you?
Well, I spent 3 years in San Francisco trying to launch my own startup, and luckily crypto was booming, so it helped support me that whole time. But
did it really?
Yeah, it was amazing. Yeah. Part of me wishes I had just taken a job and sat on all that Bitcoin, but 2020.
And San Francisco will eat up some money. It'll eat up some fiat and Bitcoin money.
Oh, very much so.
And soul and spirit.
And all soul, spirit. They'll crush you.
Yeah, it was great though. It's such at the time it was such a beautiful city and really a great place to be as a founder. Just to be in that energy and just the kind of people you can meet socially was really great.
Well, Derek, I want to ask you a question on that because that was one of the notes I wrote down here because you mentioned it last time we spoke to you about that. And just to kind of softball this whole conversation, is Silicon Valley still a place that you would think as the, dare I use the word, mecca of innovation? Should we pray for directions in that daily to Silicon Valley to keep the investments flowing, or has it dispersed? And if so, what does that mean?
Oh, sure. Yeah, I mean, there's still quite a lot of money in Silicon Valley, and all the major VCs are still very much there. The city itself has sort of changed, maybe not for the best. So it hasn't created a nice environment for people to want to live there. You're not. I don't think because of, let's just say the crime or the changing environment, it's not an attractive environment for startup founders to go to. It really never was. Startup founders, you're on shoestring budgets and you need to save money, but at least you were in this environment where people were there to support you. But a lot of folks have just moved out. So no, I think there are other cities in the world competing for maybe the new Silicon Valley.
And that's funny. I can make a smaller analogy of that. When Dan and I moved there, San Francisco, there was already kind of an exodus going across the bay. Not from a technological perspective, from an artist perspective. San Francisco was an artist community up until Dan and I got there in the mid-90s.
We chased them all out.
We chased them out. And then at some point in time, they started moving over to Oakland because they were priced out. And it's interesting. And artists pushed the limits. They set the new standards for the new artists. And so innovation from an artist perspective was happening in Oakland, not in San Francisco. And then established artists would start to come back to San Francisco because that's where the money was. But the innovation was occurring in the cheaper places to live. And it sounds like that's probably a reality for just from technology perspective as well.
Yeah, no, I think that's right.
Well, and we're up in the Pacific Northwest now, and I'm in Seattle, and that's true in Seattle. So a lot of the tech sector has migrated up here, and we're seeing that too. Like the artists. When I first moved to Seattle, we had a thriving fringe theater community, as an example. Tons of theaters on Capitol Hill and around the city, and now they're all gone. They're basically all shut down.
And you moved there when, Dan? Just so people know the time frame we're talking about.
I'm talking about maybe 16 years ago.
So not really that long. Doesn't take long.
No. And so the art scene is, they're getting pushed out to Tacoma and Georgetown and other places. So I would warn people, don't necessarily welcome the tech sector into your neighborhood because it will Housing prices will skyrocket. The people will be forced out. It will create poverty. It will contribute to the homeless epidemic because it will create disparities in income that are pretty significant. And the artists will be driven out of your community.
And how much do you think remote work has sort of affected that? Both of you, Darren, Parker, and Derek.
I mean, remote work has definitely affected certain places in the world. I mean, right away I think of Bali, in Indonesia. This was a place, I think I went to Bali the first time in 2016. I loved it. It was this sort of retreat kind of refuge environment. But now remote work has allowed all kinds of folks, everyone's moving to Bali. You have all sorts of digital marketing, influencers, and they've all moved there. And it's exactly what, we talked about. The prices of homes have skyrocketed, which has really had a negative impact on, local people just trying to survive there. I mean, it's crazy to hear people say they're spending $2,000-$3,000 a month in rent in Bali. I mean,
wow. See, that's why you don't necessarily open the doors to the tech sector, right? I mean, it's not always like roses.
Yeah. Wow.
I'm sorry, we're supposed to be boosting the tech sector with this.
Yeah.
No, we also there's, as I mentioned in our conversation, there's pluses and minuses to everything, and let's have very clear and sober conversations about this stuff.
There's to acknowledge it. Yeah, I mean, for me, it's been very helpful. So I'm not tethered to an office, which is great, especially I think in Web3 in the blockchain world, where there are builders building great projects all over the world. It's helpful to be mobile. Because it's, you could do a lot remotely, but I think it's good to just be there on the ground and meeting with these teams. So it's great to be able to travel and not be required to come into an office.
What do you think about companies like Amazon that are forcing their employees to come back to the office?
Yeah, some folks, I think they believe that it's just, it's something that's critical for a more efficient workforce. Every company's different. Some of these larger firms and maybe even some larger financial institutions, they're still tethered to that belief that they need people there, in person. Yeah, maybe, it's different.
But Derek, are you asocial? So Dan and I have gone into conversations. We've had conversations on another show that we do at times about remote work and the need for people to work together. And really it boosts productivity. And we had one where we spoke to when Malcolm Gladwell made a comment, basically, get your asses back in the office. And he comes up with an argument of why it's important. A lot of it has to make sure that the group and the company and the team have a sense of direction. It really just kind of revolves around that, right?
And a sense of culture, too.
Culture. No, you're right. Culture actually, it starts with culture, which then will manifest a shared sense of direction. And can't get that, he states, through what we're doing right now. No, I feel like I know you very well, Derek. You and I could probably go and embrace each other, give each other a big hug now since we've been doing this for 5 minutes. But other than that, I'm quick to know people. I'm quick to feel for people, but not everybody does. Is that a reality? I mean, can we connect on the levels virtually, and can companies thrive in the same way? And can people feel that sense of culture and community through remote work, or does it require really to come together?
Yeah. Dan, do you want to take that?
Yeah, well, I mean, I don't know. I'm of two minds of it, right? So I really thrived during the pandemic after I got adapted to remote work. Initially, it was really hard. And then once I got in the groove and I got like blue blocking glasses, blue light blocking glasses, and stopped getting the headaches from looking at the screen all day, I started to thrive. But now I'm back at work. I'm on campus. I'm a college administrator, so I'm on campus pretty much 4 to 5 days a week. And it does feel good to be around people and seeing people interact. And I do think there is a different quality to the type of interactions you have in person versus online. Now, that said, I could probably do my entire job online. And it is funny because I do go to work and most of my meetings are still on Zoom, right? Because it's just...
That is funny, actually. Yeah.
But so...
That's ironic,
got to find a good balance. Yeah, it is ironic.
Here's an interesting perspective, maybe even just my most recent experience. So the last, like we discussed, the last year and a half I spent at Polygon. And so in the blockchain space, managing Polygon's $100 million venture fund. And, early on, I was hired remotely. It was the first time ever where I was actually hired not in person, through an in-person interview. And most of the workforce was very much in line with blockchain. It was a distributed workforce all over the world. And we were able to foster a great sense of community and culture. But then that said, on the flip side, we decided, that the management team there decided to set up an office in Dubai. And the Dubai office started with just like a few people stopping in. And then at any given moment, it's 20, 30, 40 people there all the time. Because some things it does help to be able to just get on a whiteboard, discuss things, pop back and forth, work, see, so maybe there is that balance, but companies can be very efficient remotely. It's probably just an inherent human desire to want to be social. And
Yeah.
Dan, I also want to say, Dan, you've changed your tone too to some degree, which is, a testament to you. We all grow. Because I feel 6 months ago, 9 months ago, you were pretty adamant. I really like, or maybe a year, I like working from home. I mean, you were
I do
adamant.
like working from home.
No, to the point where, I think we had maybe we were opposing opinions, but I feel you have kind of come around, right? There is a point where you've kind of reframed your thinking based upon engaging with, I guess my point of actually inevitably engaging with your folks again. You're kind of like, I kind of like meeting with my people in person a little more than I remembered. Am I wrong, or?
Yeah, the things, when you get people back together physically, there's always social interactions, which can lead to conflict, and that's definitely come back, and that's not always fun to deal with. But for the most part, it hasn't been so bad on that spectrum. And yeah, I do, I don't think I was ever of the mindset like I don't want to see anybody.
No.
But because I do enjoy seeing the people I work with, but I also felt like I could, with my particular position, I could be very productive online. And I think I just want to make sure. What I fear is that we will go too far to one side or the other when I think we need to figure out a good balance. When does it make sense for people to work at home? And when does it make sense for them to be remote? And also recognize it's not equitable always for everybody. A janitor or a groundskeeper can never work from home, right? Unless
Safeway employee, exactly.
Safeway employees.
Yeah.
I run one of the areas I run at my school is the library. They can't work from home for the most part. The circulation staff is people facing, so it makes it hard for a lot of different.
Unless
folks.
Amazon takes over the world, and then we just buy everything from Amazon and get our books from Amazon, then we can all stay from home. So
yeah.
But even then, they have workers that have to distribute stuff. Derek, you made a comment about which was kind of close to home to me about taking your first job remotely. What was that feeling like? Because that happened to me, and I'll tell you, when you're done, it actually affected my decision.
Oh, interesting. Well, it was, I think at that point I had gotten so used to being remote. I don't know. Maybe I'm able to connect with people, over the phone or over video, and try, to get to know folks, whereas others are maybe not. It felt okay to me, for some reason. I guess I'm very adaptable. So
Sure.
I've sort of adapted to this new world where it's just like, I can meet someone easily and professionally through this video format, and actually develop a relationship with.
That's interesting. So my concern wasn't so much about the connection, because I did feel a connection, like I was making connections with the people I was talking with. I had a very good offer that I decided not to take, and this wasn't the reason why, but it was definitely something in the back of my mind, because I work in the security space. And so if you're familiar with the security space, it's sort of a paranoid space, right? Where they're constant, it's all about making sure you're not being taken advantage of one way or another. And so in my brain, I was like wondering to myself, once they asked for my social security number and stuff, like, I'm like, is this even a real company? Who are these people? How do I know they're real? What do I know? Where's their location? Because they didn't even really have a location, I think they kind of had one in Seattle, And again, like I said, that really wasn't my deciding factor of not taking the position, but it was definitely a factor that was kind of playing in the back of my head. So there's an interesting sort of disassociation, at least with people my age now. I imagine someone who's 20, 21, maybe that just doesn't matter anymore. But
They
for
throw
me,
their social security cards around all over the place.
right, maybe
Just take it.
Out there anyway.
just take it here. Just take it.
I have multiple identities anyhow. You can have
You know
one
what?
of them.
Boy, that's my fact. I only have one social security card. I'm screwing up. I'm failing.
The paranoia thing is, I think I'm going to flip that and say it's a good. Well, it's obviously it's a good thing. And even when if we're, let's say, evaluating an investment opportunity, it's always great to meet folks in person. But initially, maybe you're not distracted by just good salesmanship, and you're able to kind of look at the business more objectively in this type of a format. As opposed, so maybe there's a positive to it as far as an initial evaluation.
Interesting.
Fascinating.
Yeah.
So you're from finance, Derek. I don't want to lose that thread, right? So you started. You've been in traditional finance with a lot of companies. Morgan Chase, right? Or
JP Morgan, yep.
JP Morgan, that's right. So which some of the big giants that were involved in the big crash that led to the recession, and then you moved to the Bitcoin realm to do finance. So let's talk about the traditional, your experience in the traditional realm, because I want to map that over to what the difference is in this new Bitcoin era. So what was your experience like in the traditional finance world, and how does it contrast to what you're doing now?
Oh, sure. Well, the investment banks are really there. They offer essentially three services, equity financing, debt financing, and M&A advisory work. So with those three different verticals, you're sort of helping companies do all kinds of things. And my experience personally, I mean, it's grueling, as an analyst or an associate, you're working 80, 100-hour weeks, but you're getting maybe some of the best training in evaluating and diligencing companies. So JP Morgan, I focused mostly on leverage buyouts, so executing acquisition finance. So it's basically structuring, originating high yield bonds, leverage loans for buyouts. All the big private equity funds buying companies. So you get really good in the deal space as well, and you're very well trained from a due diligence perspective.
And what are you looking for in that due diligence? I've heard that thrown around a lot, and I know what the term means. What are you looking for when you're doing your due diligence?
Oh, sure. Well, it depends on the stage of the company you're looking at. For a lot of these businesses, if we're doing this large, $10 billion buyout that KKR and Bain are leading, you're essentially leveraging the company up to buy those companies, looking at cash flow. So, part of your financial due diligence is putting models together to see what kind of free cash flow does this company have? How much debt could they possibly sustain? Are they going to meet all their interest payments and, any kind of amortization payments? So you're doing financial diligence. You're performing legal due diligence as well. All kinds of, risks associated with that particular business or industry. And then there's technical and engineering due diligence if you're actually the acquirer. Right. So you're digging into the company from all different angles, and you're essentially trying to just pick it apart. And you want to be able to assess risk. So every one of these public documents, whenever companies issue public debt, inside them there's a section called risk factors. And you're really trying to assess any possible risk that could affect your investment or could affect the company negatively. So that's
kind of like a larger scale investigation when you're trying to get a mortgage, right? Where the bank's just crawling up your ass.
It's very similar. Buying a house is very similar to a leverage buyout. You put equity in and you borrow the rest from a bank. Yeah.
And what's the outcome of that investment then? What are you guys trying to do? Because I know Bain was famous and this could be an ignorant statement, famous for buying companies, slicing them into pieces, and probably getting more for those individual pieces than they would about the one piece as a whole. I think they were famous for that.
Corporate raiders, right?
Yeah, back in the 80s, you had these kind of corporate raiders, although now they're called activist investors.
Okay.
That's a rebranding.
It's a total rebranding. But it was more common then to buy a company and say that the sum of its parts is greater than the whole. You don't see this as much because there are all kinds of protections that have been put in place to avoid these kind of hostile takeovers. But typically, the goal is you buy a company, you come in at a particular multiple. With their large established businesses, like in the private equity world, maybe you don't get a ton of multiple expansion. Maybe you get the same multiple on the way out that you did on the way in, but in the meantime, you're growing cash flow. So you're increasing your EBITDA or your earnings. And
well, real quick, I've heard that phrase. What is EBITDA? I'm sorry.
EBITDA is just it's a proxy for cash flow. It's earnings before interest, tax, depreciation, and amortization. So take your revenue minus all your expenses. So you've got some kind of a profit number, and then you add back these accounting non-cash numbers like depreciation and amortization. And then it's
kind of like determining your actual wealth, right?
Yeah, it's kind of like a good
what your debt to income ratio.
Yeah, exactly.
All right, I disrupted that thought though, so please continue if you remember.
No, that's okay. So the idea is, if you bought a company for $100 million, let's say 20 million is equity, 80 million is debt, and then over a period of time, when you own the company, you're paying down the debt, so your equity will naturally increase, and then the EBITDA will also grow as a result of growing the business. So that's on the private equity side. I was stepping into the businesses that we would acquire and then help the management teams just in any way I could. On the venture side, it's a little bit different. The venture side, you're not going to have cash flow, or earnings. It's much more early stage. And the multiple that you come in at, you're hoping to get a huge multiple expansion. If you come in and the company's, valued at, 10x, you want to or rather you come in, you want a 10x or a 20x return on your investment. So it's a little bit different. You're going to get huge growth depending on what stage on the venture side too.
I worked for a company named Tipco that was bought by Vista, which was, and they kind of, their whole, again, I don't know what their end goal. Oh, their end goal was to go public. So they took us off the market, if I remember correctly. And then they invested some money into the company to do whatever it was they wanted to do that made them feel to bring it back to market so that it would come out at a higher price point, I think, or something. I was never quite clear, but they were obviously wanting to improve something so they could make some money off of us. They spent a lot of money in management training, which was interesting, which was kind of always a neat thing, So, and that was my first sort of engagement with that kind of experience. And I argue it was kind of positive, at least for that particular experience, because they seemed to want to actually improve the system. Like they were investing in making the team better, which kind of surprised me for some reason. Again, coming from the notion of like a company like Bain, those stories you heard about corporate raiders, or what are they called now? Green Party raiders?
Corporate activists.
Activists
investors.
Well, look, when you acquire a company, the last thing you want to do is disrupt what made it great in the first place, the reason you bought the company. Now, depending on the stage of the business, maybe if it's a venture early stage company, maybe the management team could use a few upgrades. Maybe you want to bring in a new chief compliance officer or legal team, or maybe a great chief marketing officer. So there are definitely those sort of upgrades that are required if you're scaling up a business. But more established companies, you don't want to buy a company and have the team that you fell in love with all decide to leave after you bought them. You don't want to destroy value. You want to, add value.
Makes sense.
So then you decided to make this transition into the Web 3.0 space with blockchain and Bitcoin. What made you make that decision? How did you come to that point where you're like, okay, I want to leave the old system and go into the new?
I think it all sort of centered around, or the big pivot was around when I bought my first Bitcoin. It's sort of a funny story. I feel like I'm very early with the trends. Back in 2015, I was convinced the dollar was going to collapse. I was buying.
Do you still feel that way?
Absolutely. Yeah, I do. I think we're heading towards a currency reset, but that's a whole other conversation. But no, I bought lots of physical gold and silver. I had stacks of silver monster boxes in my closet. And I was taking.
Oh, you're one of those people.
And I do want to ask you about that too. When you're finished with this, I'm curious about that. I have a question about that. But go on, please.
Yeah,
Yes.
so, but after a year of holding those assets, it went nowhere. And I think I even ended up losing, $1,000 or something like that. Because you know what, this is not a good investment. And then I started to look at Bitcoin, and then it just made me think about money and try to understand and bring my focus back to what money is. And then I really I read the Satoshi.
And what is it? What is money?
Well, money essentially it's a medium of exchange. It's a store of value. If you want to have a proper reserve currency, not a fiat currency in the way that we do in the U.S. and other parts of the world, you can't have the ability to print more of it. It has to be backed by something solid. And up until Nixon took us off the gold standard, the U.S. dollar was backed by gold. You could exchange your dollars, for gold. And so that's good, sound money. But now, once they remove that standard, the government can essentially just print endlessly, and that's what we've seen. We've seen the national debt double.
And why is it important to be backed by something, though? I mean, what's really the significance of that?
Sure.
Why can't I? I mean, if like I have bridges I need to be made, and there's not enough money in circulation, I'm going to make those bridges. I'm going to print another $2 billion to build some bridges. Here's $2 billion.
I got a printing press right over here in my basement.
Yeah, no. Dan and I are going to start printing
out money all the time.
Yeah, we're going to create our own non-fiat money.
Sure, others.
Jodah Dan coin.
Lots of folks have done it. I mean,
Yeah.
FTX printed FTT tokens.
That's right.
Oh yeah, we'll talk about him later.
Yeah.
So what is
for sound money? You need scarcity. Otherwise you're baking in inflation. Into the
So why do you need I'm going 5 whys on this one. Why do you need scarcity?
Well, because if essentially you can think of it this way: if there's no scarcity, there's endless printing. That money you're printing money, fiat dollars. Where is it going to go? Because everyone knows when you print more of something. If I'm on an island somewhere in the South Pacific and our currency is shells, right? And it's very rare for that island, but somebody comes from outside that environment and they're able to bring in a bunch of shells. Well, then essentially they're devaluing and debasing the existing currency because you're able to pump more into the system. And that currency can be used for purchasing items. So coming back to the dollar, more dollars pumped in the system, the dollar will go towards goods or real estate or stocks investments. And it will naturally, because people are buying, it will naturally inflate the prices of all of those assets. So there you're seeing in a real way inflation affecting prices as a result of printing money. So,
right.
In the last few administrations, we've seen money printing and very low interest rates. So the money didn't go to people to sort of stay in their bank accounts and help them pay their bills and buy food. It went to large financial institutions who borrowed at nearly 0% interest. And that money went towards stock speculation or real estate speculation.
Yeah,
and that's the inflation that we're living with.
I find myself thanks for that clarity. And it is that sort of designation that starts to make me think to myself, what's the point of money, in the sense, like, I do feel that we have a tendency to say humans are there to serve the currency, whereas as opposed to where I think currency is to serve the human. Because to your point, you still stuck in the shell game. I like the fact you used shells. You were still using a shell game, Derek. Because really the goal is to evaluate the value of human life, the value of human beings, right? So Jodah can talk, and people want to pay $1 million, pay money to see that. Or Jodah can dig holes. Jodah can dig holes really well, and Dan knows that I dig a lot of holes that I have to get myself out of. And so. And people, and we want to be able to evaluate that. Like, and if you have chickens and I want you, but you don't need holes, I'm screwed. Someone else might want my holes, but you don't need my holes. So we need a way to transfer that energy from point A to point B. But inevitably, that communication is about my value and your value. Then we throw this shell game into the factor, and now we're like having to service these shells. And to your point, it has to be something of finite value, because if we said, "Hey, Jodah's hole building capability is built into grains of sand," Yeah, it equals grains of sand. Well, there's so much grains of sand out there. How do you? Everybody can pick up some sand and try to get Jodah. Well, that doesn't work because I can't service all of you all. So obviously, we need a smaller set, something smaller that becomes finite, and then that comes. Then you can start playing and messing and effing with shit. And granted, I get it. You know, we're thinking obscurity is one of the great ways, but I don't even know if we make it transparent if it makes a difference. I don't know. I'm waxing and waning on something here, but I just want to know what your thoughts are on my little rant.
Yeah, no. I mean, it's we've seen there needs to be it's a store of value, right? So what does that mean? Because if I'm going to exchange, like I said, it's an energy exchange. We're trying to find a way of exchanging energy, whether through services or goods, and how do we do that? How do we transact, with that? What's the currency, and how can we hold? So there's a medium of exchange, but behind that is a store of value. And if there's just a lot of it, it's less valuable. And that's the problem. I mean, it seems like all great nations and great empires, throughout history have eventually gone down this path, and they've continued to debase their currency. In Rome, you went from gold coins to nickel to bronze to, wooden coins. And
they ended up doing wood?
Yeah, it's like a continued debasement of the currency. And then it's like, well, gold is more valuable than wood. And it's like, well, where's the money going? And they're just sort of printing to keep the economy going. And yeah, that's what we're seeing now. So that's why, when I discovered Bitcoin, maybe to kind of
I was going to help you get back on track.
Yeah. It was, I was amazed by it. I was amazed that someone had taken all of these different types of technology and put them together in this elegant way. And it just made total sense to me. And I had heard about it before, but I kind of thought, well, look, Bitcoin is purely speculative. It's only worth what somebody thinks it's worth. But I didn't really understand it until I dug in. And then that's what opened the door to all of the other, cryptocurrencies, but then blockchain technology overall. Yeah, kind of.
So when I hear you say that, right, because you've just spent a lot of time talking about backed commodities, like that the dollar needs to be backed by gold, for instance, right? And when I think about Bitcoin, I think it's kind of a fictional value too, right? It's not really backed by anything other than math, maybe, right?
Well, there's a limited supply. So the way that that Satoshi structured it is that, essentially every time you validate transactions, people who are able to print the next block get a reward, and that reward is paid out in Bitcoin. So you're minting new Bitcoin, but there will only ever be 21 million Bitcoin in all of creation.
How much is out there right now? Do you know?
I think it's. Oh my goodness. I think it's 19 or 20. I mean, it's very, we're getting close, but it's sort of exponential. We're
getting close to the end.
Yeah, it will go out for the next, I don't even know, 100 years or so. Because the reward itself gets half every 4 years.
So that last coin is going to be like this mega value coin, and it's going to be like, and whoever gets that coin is going to be like rich.
Well,
straight up.
There's a lot of speculation on the price, and it's based on the supply, and obviously demand, right? So we're seeing more demand, institutional demand through the different ETF applications, whether it's BlackRock or VanEck or ARK, or there's a whole host of them, and so we're starting to see potentially the next wave of adoption, which might be the institutional adoption.
So to kind of go back to Dan's question. It sounds to me your response is it's not so much the importance of having something solid to invest in, that to back it. You don't need to find something in the actual world of finite value. It's the act of of defining a finite system. However it's done, that system must be finite. And again, back to what Dan said, there's a math algorithm, and what is it called? Proof of work, right? It's proof of work for Bitcoin. Yeah. And the proof of work part, that gives us this limited amount of numbers of these things that you can put value into then. So that's the key point, is making sure you define something that's finite. And however you do that, it needs to be stable somehow, controlled. You can't have input from outside or inside to say, actually, we got a little more than that. You don't want that.
Right.
But it doesn't have to be a physical object like gold.
It doesn't have to. If you look at what money is, Bitcoin is a better form of it. Because and also it's all of the different characteristics. It's on a decentralized distributed ledger. So there are, and at first glance, it may look like a very inefficient database because you and I, like 10,000 different machines, are all updating the same ledger, but it allows a higher level of security and no one can go back. So the historical transactions are immutable. You can't go back and change them in the way that a centralized bank, could go back into their books and ledgers. A mistake, let's fix it. You can't do that with blockchain. So that's one of the amazing principles of Bitcoin. There's a limited supply. There's an immutable history. It's distributed. It's decentralized, completely permissionless. I don't need to know who you are. I have to verify that you have the Bitcoin that you're sending me. The code does it, and it uses cryptography in SHA-256. A hashing algorithm, so it's a sophisticated project, but it stands alone. And I think Michael Saylor talks about this all the time. Go to the airport with a gold bar. Try to travel with gold coins or gold bars. They won't let you. They'll most likely confiscate it from you. Or try to travel with the $100,000.
No, you can't. You can't. I don't think you can fly with more than $10,000.
10,000, yeah, exactly. But even then, it's like you're raising suspicion, and it's your money.
Well, then you're a part of the mafia.
That's right. They make all kinds of assumptions. Yeah, but with Bitcoin, it's digital. I could put it in a flash drive, or it's somewhere in some sort of custodial wallet.
Okay, so I hear you, right? And this is often the stance people on the show take, right, around Bitcoin and the gospel of Bitcoin and the transparency aspect. But we have Sam Bankman-Fried, who just got prosecuted, found guilty of fraud yesterday, right?
Oh, it was yesterday. Okay.
Yeah, he's facing 110 years if when the sentencing comes down. So how do we explain him? If Bitcoin, the Bitcoin ecosystem and the blockchain ecosystem is so transparent, how was he able to get away with what he did?
Sure. I mean, this is just, I would call it classic organizational fraud. That's all it is. This was the fact that they ran an exchange for people to buy and sell cryptocurrencies is almost tangential. They did one of the things that you never do. Well, essentially, FTX was an exchange. And then they also ran a business called Alameda Research, which was a hedge fund. And They allowed Alameda to use customer funds from FTX to trade with. And you can't do that, And so they broke all kinds of laws doing this. So, it's gross financial mismanagement and just fraud. Now, part of me feels like, so that aside, if they didn't do that, part of me feels like they were growing so fast that they needed the right kind of management team upgrades. They didn't have a CFO. They didn't have basic financial and
Bankman-Fried is this young wonder kid from Stanford, where his parents are Stanford professors. He's this young genius, a wonder kid, donating all this money to the Democratic Party and doing activist investing himself to try and prevent Trump from running. I mean, this guy is like, he's a hero. Why shouldn't we put all of our faith in him?
Yeah, I mean,
he's like Jesus Christ resurrected.
Unfortunately, he violated securities laws, but the biggest thing is using, if your customer.
Wait, Derek, you said he violated securities law. That's not, in my mind, the most important thing. Didn't people get hurt?
That's absolutely. People lost money. I mean, I know there are all kinds of stories about people holding their retirement funds at FTX, and it's hopefully there's enough cash for people to get something. As the bankruptcy proceedings kind of continue, but no, there was.
Shouldn't the Democrats just pay back everybody?
I think they should, but they probably won't.
Well, I guess what I was trying to get at with my little monologue there, Derek, was trying to speak, pivot off of what you had said about mature management, right? I have a theory, like, especially in Western culture, we have this kind of fixation on youth, and the new generation is going to be the savior of the world. And I think the Sam Bankman-Fried persona initially was part of that youth. I'm going to be able to save the world and do all this stuff, when we know that's kind of bullshit, right? And so I think that speaks to what you were saying about, yeah, they needed more mature managers. You just don't want to throw a kid into this playpen with billions other people's money, billions of dollars worth of other people's money, and expect them to have the ethical compass or ethical depth to make good decisions. Because we know there are 50 and 60-year-olds in the in the fiat financial world who can't make ethical decisions. Enron, right? So
yeah, fraud. It happens. It happens. I mean, I think so. I mean, even just to kind of speak to my own experience, I kind of grew up professionally in a very traditional environment, and places all like an investment bank. They've worked through these issues already over the last 100 years. So I was sort of I came up in an environment that we thought a lot about compliance and conflicts and sorts of just good governance policies. And when I was working on deals, so not to get off topic, but when private equity firms are trying to acquire a business, a lot of them compete. So a bank will run an auction process. So a lot of times there are similar teams within the same investment bank, but we don't even talk to each other. There are all of these firewalls that are set up from a compliance perspective. So, even in a situation like that, my colleague could be working on the same deal, but we wouldn't know it. And
right.
Also, there's a legitimate fear of going to jail. I don't want to break the law, even by accident. And I think, a lot of the young entrepreneurs...
Is there really a legitimate fear? I mean, maybe larger companies, but I mean, I've worked for a lot of startups, and that's not usually the number one concern.
It's not, but this was an exchange. To me, this is
but when you work with finance, I could see it being different than
okay,
with different levels of control and compliance, requirements.
So Dan, I want to stick with the one thing that we kind of skirted over. Dan made a point of. I'm curious of your thoughts on that. Youth in this world, youth is perceived as a disruptor, right? I think youth is like, get that young person in here because they're willing to disrupt. And what is the factor of youth versus wisdom and age or whatever when it comes to investment? Are investors looking for wisdom? Are they looking for disruption? Is it space contingent? What is the factor? Because I am old, and I'm going to go start a company. And how is that, the age being business old, going to get in the way of investors going, yeah, I want to give him money to make that happen?
Sure. I mean, well, on the investor side, experience helps to avoid certain situations because you probably lived through either failures or when things go wrong. So that's where experience really helps. On the founder side, youth is just youth and excitement and drive and grit. These are the things required to launch a business. So in a lot of ways, you need that youthful energy and that sort of optimism that you can do anything, and you'll need that, because starting a company, taking it from that 0 to 1 stage is very difficult. Finding the right partners, finding the right team, figuring out product market fit, raising money from investors, it's a grind. And you kind of need that youthful energy to drive forward. And you can have youthful energy at any age. But
I'm much more youthful than Jodah.
And Dan's 70 years old, so it's
I am
looking good.
Look good, don't I?
I think we're. Are we in the you look good for your age phase?
It's vampirism. Vampirism. I mean, I drink some blood every day.
Yeah, that's right. Dan sucks the blood of.
But no, I mean, and then at the same time, as a venture investor, what you don't want to do is stifle that type of energy and excitement from a founder and come in and say, oh, let me help you run your business, or let me help guide the vision. No, if there's a great founder with a great product, great team, you want to be able to foster that and not, kind of stifle it.
Yeah,
Interesting. And isn't it possible that really what you're looking for is somebody who's willing to go to jail for 20 years because when they get out they'll be 45 and they can still go do something?
I don't know about that.
Oh, okay. Am I wrong about that? Oh, okay.
I know we only got a few more minutes here with you, Derek. I want to talk about your venture capital work in this space, in the Bitcoin space. What are some businesses that you're working on funding right now? What are you looking for in businesses to invest in?
Sure. Yeah, I think it feels like the markets are changing, or at least the mood or sentiment. We've been in this crypto winter now for a couple of years.
Can you just describe that? What does that mean and why?
Winter is coming.
So the markets overall, this happens with blockchain and crypto. It comes in these different waves. We had this sort of 2020 DeFi summer where all these projects were launching, and it's kind of natural for a 2 to 3 year period where we had very aggressive investing, and then things tend to kind of slow down a bit, which is not a bad thing, because what we're seeing now, we're in this point where we're going to be able to see which of these companies will survive, which were able to figure out or get their product to a certain point and figure out market fit right away. So it's a very unique time right now. But no, where we're looking to invest, it depends. The last 2 to 3 years, you've seen huge investments in the blockchain gaming space. I think you're going to see continued activity there. But more so, I think dollars are probably shifting over to the DeFi space, and specifically tokenization of real world assets.
And what is DeFi space?
Decentralized finance, just broadly speaking.
Meaning?
It's basically taking any sort of financial product or service offering in the traditional world and using blockchain to, in a way you could say, automate or decentralize or make it more efficient, or a more visible, efficient ledger system. Tokenization of all kinds of assets has always sort of been the promise of blockchain. I think we're starting to see larger institutions, traditional institutions, wanting to come into the space.
And when you say tokenization of assets, are we literally going to the point of like, that tree has some tokens on it, that car has tokens on it, that rock has some tokens on it, like literally tokenizing
Bigfoot token.
The world? Bigfoot has tokens on it. Is that what we're kind of talking about? Or?
we could token. Yeah, sure. Bigfoot NFTs. Those are tokens.
There we go. We should do that.
The next
Launched
one.
it here, folks. We launched it here.
I love it. Yeah. So, even like within the climate space, they are in fact tokenizing carbon credits. That's what a lot of those carbon credits are. You could take a large plot of land, and that land is projected to produce a certain amount of carbon over a certain period of time. You kind of take it almost like a fixed income product. You could securitize it and sell it in the form of a bond. But that bond can be tokenized, meaning essentially goes from the traditional financial world onto the blockchain. So you can sort of think of things on-chain, off-chain. And tokenizing means I can now go and purchase either a whole token or a fractional version of that token, and I can own it. So and along with that token, it's digital programmable security in the form of embedded in a smart contract. So
has Bitcoin? We ask this question kind of regularly. Has Bitcoin crossed the chasm? Does it need to cross the chasm? If it hasn't crossed the chasm, what gets it across the chasm?
And do you mean
Bitcoin? I'm blockchain technology.
It's interesting. I feel like a lot of the businesses that I've had a chance to look at are so far on the leading edge of development. It's very exciting, especially being at Polygon too, from a technology standpoint. Really on the leading and cutting edge of blockchain. But most people in the world have no idea what's going on. Most people, still don't even understand Bitcoin. So we're still very early. But I think with continued institutional adoption, people will become more familiar with it. And honestly, people don't need to know how blockchain technology works to be using it. Yeah, I think the adoption will continue, and then maybe there will be new catalysts that sort of skyrocket it. So I'll give you an example. Things like NFTs, right? So I have no idea what a collectible is worth. I really don't. But I believe in the technology and the application of the technology, and what it's going to do going forward. But that whole wave that occurred brought in a whole new set of users, and it brought a bunch of people in who now have wallets. So that's a big deal, So with like all of these enterprise adoptions, you're bringing people in little by little into the space. Even as example, Reddit. So Reddit, by allowing people to change their avatar with an NFT, they instantly created a wallet for every one of the users. So a non-crypto person is now a crypto person. They have a wallet. And it's kind of like, so little by little, we're introducing it and inching people essentially into the blockchain or into Web3.
Oh, that's fascinating. Yeah, I guess you have to get to that tipping point, as Malcolm Gladwell would say, right? Where is that point where you get where the trend moves to such a direction that it tips over and then it suddenly becomes popular and mass adopted?
Yeah, and it could be NFTs. NFTs, essentially, non-fungible tokens. I think there's, maybe over the next, who knows, 3, 5, 10 years, I think people will be interacting with all different types of digital environments. So metaverses. And to be able to access those environments, you're going to need your key card. And that
what you're going to need? Honestly, I'm going to tell you. I'm going to give you the key right now. Sex.
NFT sex?
I'm not joking.
It tends to drive technology.
You want mass adoption? Tie it to sex somehow.
Tie it to the porn industry or something like that.
I'm just saying.
Yeah, you're probably right. Yeah. They say that's what drives new technology, either weapons or sex. Either tie it to sell of weapons.
And I'd rather it be sex than weapons, personally.
Yeah. Derek, do you have any Bored Ape?
No, looking back, I saw that trend, and to be honest, I didn't get it. I couldn't get on board with it, but I'm actually very excited about what the folks at Yuga Labs, the Bored Ape folks, are doing, and Pudgy Penguins on the IP licensing side. I think they're going to be really leading the technology innovation going forward. But no, I missed it. I almost, in a way, I kind of looked down on it. I just didn't get it. But again, I don't have Pokemon cards. I don't do the collectibles thing in that way. I would collect guitars, but that's a little bit different. I didn't quite get it. No, I missed out on the Bored Apes. What did you guys? Are you guys in that space?
Nope.
No, I didn't get it either.
A crypto skeptic.
Yeah.
I do this show to kind of maybe indoctrinate myself.
We're exploring. We're on a journey, and we're trying to help those who aren't all bought in on anything new, because most people aren't. Kind of understand this space, and really the audience here is actually probably all in already. So what we're trying to do is bring a level of empathy to a bunch of people who probably aren't working hard to empathize, right? Because they're just excited about the technology. And there are 6.5 billion people who will be affected potentially by the decisions made in groups like these. And it matters. And that's what we're.
But if somebody wants to gift us some Bitcoin, we'll take it.
Oh, I'll take a Bored Ape. If someone wants to give me a Bored Ape, I'll take a Bored Ape. I want more boredom in my life, please.
Yeah, they're fun. I mean, they've built such an audience that they'll continue to monetize. And I think within those NFTs, here's the beauty of an NFT or a smart contract. In that NFT, you can embed certain rights, and it can give you access to whether it's certain media assets, events, or even potential future revenue streams. And so it's an amazing technology if you kind of step back from just the pure speculative nature of collectibles. It's actually really great.
No, I love the idea. I actually am very intrigued by it, and I recommend everybody, I say it every time, read a book called, what is it, Dan? I always say, Sacred Economics. It really embodies the reason why these technologies are coming out. So, hey, Philip's going to be joining us in a second, so we should probably be wrapping up this great conversation.
How can people find you, Derek?
Well, I guess I'm on, LinkedIn and Twitter. I need to work on my my Twitter
X,
following.
it's X now.
X is right.
Sorry, of course.
It went porn. It just went porn, like Dan was talking about. Everything has to go
Exactly.
porn.
See, Elon knows how to do it.
But yeah, you follow my socials or on Instagram, and maybe I can share those later with you guys.
Well, cool. Well, hey, Derek. I mean, I don't know when. Yeah, this has been fantastic. I could talk more. I'd love to learn more about your
3-hour episode with you.
Seriously, we could. But yeah. Where are you, by the way, right now? Is that what's in the background? What are we seeing?
So yeah, I tend to I'm all over the place, all over the world these days. But right now, I'm in Charlotte, North.
You're okay. You're still in Charlotte. Okay. All right.
Yeah, it's great here. It's nice.
Okay, excellent. Cool.
I've only passed through Charlotte on a drive, so I lived in the South for a while. It's a much different culture, especially if you're coming from someplace like New York City, where you're from, right? Or
very at least different. I've had to adapt to different New York to California, Southeast Asia, now Charlotte. Yeah, you can't in the South. You can't be too New York in North Carolina.
No, it's a much slower pace, right? Yeah. Like kind of more leisurely.
Yeah, it's different. It's good though. When you do a lot of travel, it's nice to have this kind of a home base.
Yeah. And so it's 7:00.
Yeah, we can wrap this up. Philip will be coming on soon. There he is.
Hey,
Philip.
guys.
Yeah, no, that's right. Hello. So
hey. How are you guys doing?
We are
doing fine, Philip. How are you?
Really interesting. I'm doing
Philip's
okay.
also traveled all over the world and had gotten struck by lightning.
Almost died. His life has been a series of near-death experiences.
What a rare club.
Yeah. No, a few crazy things. Yeah,
absolutely. Well, hey, Philip, what are you going to talk about today?
From my perspective. So today we're going to talk about the news. The SBF jury found him guilty on 7 counts of fraud and money laundering and everything else. So that's one of the things we'll talk about.
Pokey. He's going to the Pokey for 110 years.
We actually don't know how long yet.
I'm joking.
There may be an appeal. We'll see if that goes through or not.
Yeah.
Oh, I'm sure there will be an appeal for sure.
I mean, but I wouldn't give up even if I was wrong, in this kind of situation, right? So
he'll go to your for 10 years. I say 10 years. I say it'll be 10 years max, maybe 15.
I saw some people kind of giving their predictions on Twitter, and some people were saying 60 years, 100 years, 10 years.
I think they need to send a message. I think 60 years is fair.
I don't think it's going to happen because they're going to pull out stuff about the Democratic Party, and they're going to have to make backroom deals to satisfy that issue. And so there'll be, I think.
You think there'll be a political aspect to it?
Yes. Well, yeah, absolutely. Their team will pull that card. There's no doubt about it. So
and actually, I found this fascinating because I'm actually in the NFT space. So when you guys were talking about that, I was like, okay, I understand everything they're talking about. That's awesome. From like a gaming point of view,
good.
also like real world assets. So I was like completely into this. I also don't have a Bored Ape, so I also missed that train. So I was able to listen in and follow as somebody who's in crypto and understand everything, as well as completely enjoy your discussion here today. So thank you guys a lot for that.
Yeah.
That was awesome.
Totally, Philip. Thank you for listening.
Yep. All right. So I have got to go to my other world life. Thank you, everybody, for joining Spotlight. Derek, again, appreciate joining us. Dan, as usual, I love you. And I will see you all the next time. So,
all right. Thank you guys.
Yep.
Yeah. Thank you. Wonderful meeting you, Derek. See you, Philip. Take care, Jodah.
Thanks for having me. See you guys.
See ya. Thanks. That was fascinating. I found that really interesting on many aspects. So today is the 3rd of November, 2023. You just watched Hashed Out Spotlight with Derek Albanese, Jodah and Dan as co-hosts. And definitely like this if you enjoyed it. And also feel free to subscribe. We have other interviews coming up. And also we do daily news like what I'm about to do the rest of the week. So let's get into it then. So Abu Dhabi Global Market, ADGM, introduces groundbreaking regulations for Web3 organizations. Let's take a look at this. Hi, anonymous user EF35B, M Valentina, GM Momin, thank you for joining us today. The Abu Dhabi Global Market Registration Authority has recently unveiled a pioneering set of regulations aimed at governing Web3 organizations. The regulations allow the creation of DLT foundations to support blockchain networks. ADGM's strategic move aims to solidify its position as a leading hub for blockchain and digital asset innovation. Solana's remarkable 80% gain, Firedancer testnet ignites a surge. We talked about this yesterday, actually. Hacked multi-chain protocol exhibits recovery with confirmed transactions. We talked about that yesterday as well. Hong Kong's officials unveil ambitious tokenization regulations. I don't think we talked about this yesterday, so this is something that came out since our show yesterday. Hong Kong enhances crypto regulations for Web3. Tokenized bonds prove blockchain's value, the balance struck in regulation and innovation. The UAE issues DLT regulation allowing issuance of governance tokens. This is interesting, especially for DAOs and such. UAE is the first country to issue DLT foundations regulations. DLT foundation entities will be allowed to issue governance tokens, new regime to enable positive transformation for blockchain and Web3 landscape. UAE's Abu Dhabi Global Market, after announcing its DLT token issuance consultation paper in April 2023, has now officially launched its new regulation that will allow DLT, so distributed ledger technology, foundations, DAO, decentralized autonomous organizations, to issue tokens. This means that DLT foundations of Layer 1 or Layer 2 protocol foundations can receive licenses from ADGM and offer tokenized assets or digital assets, or possibly established organizations wishing to use DLT and issue tokens. This new regulation could encourage global blockchain DLT protocol foundations such as Ethereum, Cardano, Hedera, and others to enter the UAE. Moreover, homegrown protocols such as UAE-based Venom Foundation, which recently announced a partnership with the UAE government to establish the national carbon credit system, can also utilize the new regulation. And in the interview and discussion you just saw, they did talk about tokenizing carbon credits. So that's interesting that this is actually in one of the first articles we go through right after the show. SBF's last stand in jury's hands, inside look. So I'm going to skip all of those until we get to the actual jury discussion here. Prosecutors call SBF out on his web of deceit. ProShares officially announces the exciting launch of short Ether-linked ETF. Let's take a look at this. ProShares has launched the short Ether strategy ETF, or SETH, aiming to provide investors with a convenient way to profit from Ether's price movements through traditional brokerage accounts. The firm continues to expand its cryptocurrency ETF offerings, with SETH joining a lineup that includes Bitcoin and Ether-related funds, reflecting the growing demand for crypto investment products in traditional finance. Visa and local banks finish digital dollar test in Hong Kong. Visa, HSBC, and Hang Seng Bank successfully concluded a pilot program for a digital dollar EHKD in Hong Kong, experimenting with deposit tokenization and instant interbank settlements. The platform operated 24/7, surpassing traditional payment systems in availability, and maintained transaction confidentiality while using blockchain technology. Following the successful test, Visa is exploring further into tokenized assets, markets, and programmable finance, with plans to initiate phase 2 of the EHKD program. What is phase 2? The road ahead, there we go. Visa, unyielding in its quest for innovation, is now poised to delve deeper into the vast expanse of tokenized asset markets and the intricate tapestry of programmable finance. Envisage a scenario where digital dollars streamline property transactions, where funds effortlessly flow from buyer to developer upon contract fulfillment, obliterating bureaucratic lag and ushering in a new era of efficiency. This digital dance is set to advance into its next act, phase 2 of the EHKD program, buoyed by the triumphs of its initial foray. The digital dollar has irrefutably etched its mark on the financial landscape of Hong Kong, thanks to the relentless efforts of Visa and its banking allies. This venture is more than a mere pilot. It's a bold declaration that digital currency is here, not just to stay, but to revolutionize. And in this digital renaissance, Visa has undoubtedly emerged not just as a participant, but as a formidable conductor of change. The digital dollar has become a harbinger of transformation in Hong Kong's financial ecosystem, all thanks to Visa's unwavering commitment and the invaluable collaboration of HSBC and Hang Seng Bank. The HKD program stands as a testament to what's possible when innovation, security, and vision collide. As we stand on the cusp of this digital revolution, one thing is certain: the financial world as we know it is irrevocably changed. Understanding UK's new crypto rules under FCA. So the UK introduced new crypto asset regulations on October 8th, leading to confusion and low compliance levels among crypto firms. The Financial Conduct Authority, FCA, responded by releasing a 32-page finalized non-handbook guidance on November 2nd, aiming to aid crypto firms in understanding and adhering to the new rules. It's just not clear enough, I guess, on its own, so they had to clarify. 32 pages isn't too bad for understanding regulation, to be honest. Hayulia Mig and Nadia 420, Gia Moman, Rana Kesar. Nice to have you with us. Lessons from the US where Europe fell short. Now we're getting into economics. The US economy has experienced impressive growth with a 4.9% annual increase in the third quarter, while Europe remains stagnant. Both the US and Europe had similar GDP per capita growth since 2000, but they diverged significantly post-pandemic, with the US recovering faster and stronger. The divergence in economic performance raises questions about the underlying causes, particularly in terms of policy choices. I wonder if it's because of the huge taxes in Europe. Let's see. Let's not dilly-dally. Europe's sluggishness isn't a result of some long-term trend. Both regions, when stripped to the bare GDP per capita and adjusted for inflation, have danced the same economic tango since the dawn of the millennium. But post-pandemic, the US has left Europe in the dust, surpassing pre-pandemic peaks half a year prior to Europe and maintaining a steady growth momentum. Europe, however, has flatlined. The US is barely scratching below its 2015-2019 growth trend, whereas Europe lags with a 5% shortfall. Analyzing the stark divergence, it's clear that the US is the victor in this round of economic battle, but why? The search for answers steers us towards the households, the beating heart of the US economy, fueled by robust consumption and investment. This leaves us pondering which policies catapulted the US to these heights of economic exuberance compared to Europe. So for just having grown up between France and the US, one thing that's extremely different between the two is in the US, people understand money and business way better than they do in Europe. And in Europe, there's almost no chance of you having enough funds to be an investor. It's almost impossible if you work a regular job to have money in the stock market or buy your own home, if you're my age, for example. Whereas I know people younger than me in the United States that worked as a dishwasher and bought their own home within 3 years in cash. So like there's a huge difference. And when people are complaining that it's too expensive to buy a place to live in the US, don't move to Europe unless it's a country that has a very low cost of living. Western Europe is going to be a very big wake-up call that there's nothing you can do there. Like you're going to have to throw all your money into paying taxes unless you have a very good accountant or something. It's very difficult to deal with. A lot of bureaucracy, a lot of taxes. And so one of the big differences is that, for example, in France, France and Denmark are both kind of like this. If you have an employee, you pay 2/3 in taxes and 1/3 in salaries. So the salary is actually, For example, say when someone's salary is $1,000, their tax that they have to pay for paying that salary, this isn't even like the corporate tax or anything. This is just tax on having that salaried individual, will be $2,000 a month. So over the year, you're paying twice as much in taxes for each salary that you're paying. If you have 100 employees, you're paying 200 times that in taxes just for having those employees. So there's this big thing against actually producing jobs because it's extremely expensive to create any jobs. And that system is similar in a lot of countries. A lot of them are better than France in that sense. So you have a higher chance of actually getting a job. A lot of people are living off the social welfare system, which means they don't have extra money to, invest and do things like that. A lot of people will spend money on a flat screen TV over even paying for their kids' meals at school, for example, if they have to do that with government aid. And so the decision-making process is a lot less responsible. Let's put it that way. It's more like, oh, I want to get this fun toy thing. There's a lot more emphasis on entertainment because no matter what you do, theoretically, the government will house you and pay for your bills and keep you alive. So there's this kind of like, it's the problem with the net. So let's see. The fiscal policies of the two regions are as different as night and day. The US embraced a more substantial fiscal stimulus, allowing its deficit to balloon more than Europe's. This, coupled with progressive policies focusing on unemployment benefits and wage compression, resulted in a staggering accumulation of unspent money and a boost in consumer spending. The US also they gave a lot more money to people that were unemployed than they would in France, for example. And that's interesting because that was completely new in the US and that caused issues of its own. For example, a lot of people couldn't order things and receive them on time because the whole transportation system, so many people just quit their jobs, went on welfare and unemployment and just relaxed for so long that the entire kind of logistical system broke down. And from the last I looked into it, it would take a year and a half to catch everything up. While both regions have experienced similar inflationary pressures, the US has managed to maintain its growth trajectory, leaving Europe grappling with its economic shortcomings. So where does Europe go from here? It's high time for a moment of introspection and learning from the US playbook. The American fiscal stimulus has proven its worth, upholding the economy without wreaking havoc on inflation, a stark contrast to the stringent European budgets. Is Europe's sluggish growth a result of delayed effects or policy missteps? Only time will tell. But one thing is for certain, the US's willingness to embrace bold fiscal moves and progressive policies has set it on a path of economic resilience, leaving Europe in dire need of a strategy overhaul. Europe's stagnation is not a badge of honor, it's a wake-up call. The US has demonstrated that strategic fiscal policies, coupled with a focus on domestic demand, can propel an economy to new heights for a time. Europe, it's time to take notes and rethink your economic playbook. The world is watching and the clock is ticking. Interesting. It's an interesting take. The stimulus packages were seen as one of the reasons for the inflation that the US has had. But it makes sense when there's a rise in spending that there can be growth, obviously. So but a rise in spending, it can also cause inflation, and quick growth also causes inflation. So the fact that they're able to lower inflation and keep growth high is an interesting thing right now, especially compared to the rest of the world. The only country I think of that's doing better than the US is maybe Switzerland, and they have a very different kind of economy. Dubai's Bara grants WADSPay initial approval, paving the way for crypto expansion. Dubai's Virtual Assets Regulatory Authority provides WADSPay with an initial approval license, a significant step towards a full VASP license. Dubai has strengthened its position as a crypto hub, with major players like Backpack, Komainu, and Nomura's Laser Digital receiving varied operational licenses in recent months. There's a lot happening in Dubai. I'll give you that. The prosecutor is closing arguments in the SBF trial. We won't talk about that until we talk about the actual jury decision. Bitcoin whales from Satoshi era emerged. $230 million in BTC transferred after 6 years of silence. 3 major Satoshi era Bitcoin wallets dormant since 2017 have recently transferred a combined total of $230 million in Bitcoin. 2023 has seen a trend of such dormant Bitcoin whale addresses reactivating with significant transfers, hinting at the unpredictable dynamics of the crypto world. Still wondering if we'll see Satoshi's wallet make a move. China to use blockchain for cross-border payments. China's currency bridge integrates blockchain to enhance cross-border payments, ensuring efficient and secure financial transactions. The Money Bridge blockchain, MBL, supports this initiative with successful pilots involving over 150 million yuan in settlements between 20 banks. The system prioritizes privacy and security using advanced algorithms and a privacy management system that limits sensitive transaction details to the parties involved. I find that interesting from a user perspective. Let's see. SBF's lawyers fight back against prosecution's claims. Like I said, we'll talk about SBF all at once. PayPal's promise to trim down eases crypto nerves. PayPal's market value surged by $4 billion as it promised to focus on profitable growth despite an SEC subpoena on its stablecoin project. The company's stock jumped 7% after a robust profit forecast, indicating strong consumer spending amid economic uncertainty. New executive appointments and a leaner operational approach have bolstered investor confidence in PayPal's strategic direction. It's interesting. ETF frenzy diverts attention from Coinbase's uncertain path. Coinbase's market optimism rises amid ETF speculation despite regulatory uncertainties. Analysts warn the ETF could drive business away from the company even as its third quarter report shows potential revenue growth. The SEC lawsuit overshadows Coinbase's future, with the outcome possibly leading to a company breakup. Oh, wow. Because they're huge, I guess, in the US. So antitrust laws may apply. Elon Musk discusses NFTs amid a significant drop in activities. Elon Musk recently talked about NFTs from his perspective as the industry's activities continue to decline, redefining the security and integrity of NFTs. He discussed this with Joe Rogan. That's right. On the widely popular Joe Rogan Experience podcast, he expressed reservations about many NFTs not being completely stored on the blockchain. His concern revolved around the fact that some NFTs essentially function as URLs to JPEG images hosted on external servers, potentially posing risks to the safety and availability of the artwork. Elon Musk highlighted the need for more secure storage of NFTs, proposing that the image of JPEG should be encoded within the blockchain. He underscored the risk of losing the image in case the company hosting the artwork goes out of business. Shedding light on a notable downside observed in various NFTs, criticisms like this were common during the initial boom of NFTs, especially when hefty sums were paid for assets like Bored Ape and CryptoPunk's avatars in 2021. An illustrative incident occurred when FTX, a crypto exchange, encountered issues with its NFT marketplace and associated items after its servers faced disruptions late last year. However, Musk's observations don't uniformly apply to all NFTs. Many NFTs are not just images. That's one thing. And some NFTs do actually have them on the blockchain. So that's a whole discussion about ordinals, for example. Chatty 2023, Binance user ABD4E, Banzal Boy, BUSD Boxes 5, Muhammad 66, Elamoni, nice to have you guys with us. Alira Aras 2019, nice to have you with us as well. MicroStrategy's Bitcoin gain rises to $900 million. The total gain on MicroStrategy's Bitcoin stash has increased to about $900 million. Spot Bitcoin ETF and its effect on the price of Bitcoin is definitely part of the reason for that. Lazarus Group deploys candy corn malware on an exchange. So a recent report by Elastic Security has revealed that the Lazarus Group deployed a sophisticated malware on an exchange, rising cybersecurity challenges in the crypto sector in 2023. It's something important to keep in mind when you do anything online now. Hi, SBD 731, nice to have you with us. Dubai Financial Center regulator approves TON and XRP tokens. TON and XRP get accepted into Dubai's financial center crypto asset regime, joining Bitcoin, Ethereum, and Litecoin. Virtual asset firms within DIFC will now be able to incorporate XRP and TON into their virtual asset services. DFSA will be launching its next set of proposals focusing on custody, financial crime, staking for proof of stake. SBS fraud trial, jury enters decision phase. Talk about the decision in a moment, because all of this comes out little by little during the day, right? So these are mostly from yesterday evening, and little by little through the court case, different articles appear about the different steps. Dubai International Financial Center greenlights Toncoin and XRP. We talked about that as well. All right. SBS fraud trial, jury enters decision. So we're looking at the same ones from before. There we go. A jury delivers a guilty verdict for SBF on all 7 charges. This is the big news of yesterday, right? Sam Bankman-Fried was convicted on all 7 charges related to the FTX collapse, marking a stark downfall from billionaire to felon. SBS former confidants, including his ex-girlfriend, testified against him, revealing internal misdealings and preferential treatment within FTX and Alameda Research. With the conviction, attention turns to SBF's sentencing set for March 2024, alongside ongoing discussions about tighter regulations in the crypto industry. So in a decisive conclusion to a high-profile case that has gripped the financial world, SBF Sam Bankman-Fried faced the music as a jury found him guilty on all 7 counts of fraud and conspiracy. This landmark decision signals a watershed moment in the crypto universe, bringing a stark end to the erstwhile billionaire's fall from grace. The weight of the verdict was palpable as SBF, once a cryptocurrency titan at the helm of FTX, stood in the courtroom, a stark contrast to the vibrant figure who once graced industry conferences. The jury took less than a full working day to deliberate his fate, signifying a clear-cut decision. His parents, enveloped in the emotional gravity of the moment, could only offer a silent, supportive presence as their son faced the repercussions of his actions. SBF's descent is as dramatic as it's cautionary, casting a long shadow over the crypto empire he built. FTX, once a cornerstone in the market, touted itself as a beacon of innovation and security in the volatile world of digital assets. Yet behind the veneer of success lay a labyrinth of financial misappropriations that would unravel, bringing the company to its knees. The charges painted a damning picture of SBF's conduct, revealing that he systematically pilfered billions from customer accounts to prop up Alameda Research, his trading house. Despite becoming aware of the intertwining finances of FTX and Alameda, SBF failed to enact safeguards, negligence that culminated in an $8 billion debt hole with no repercussions for those responsible. SBF's trial was not just the trial of an individual, but an entire ethos that the crypto world to some extent embodied. The speed of FTX's rise and fall mirrors the volatile nature of the crypto markets it once navigated. The platform, known for its aggressive marketing and celebrity endorsements, crashed spectacularly, leaving a wake of financial devastation. The saga unfolded as a grim reminder of the dot-com bubble, resonating with a modern echo of unchecked ambition and the perils of speculative investments, and just stealing users' money. Like that's the biggest issue here, is taking user funds and doing what you want with them. You can't do that. That's unethical and illegal. And like, if there were no justice system, people would kill you for doing that. It's as crazy as borrowing somebody else's bicycle or their phone and never giving it back and just doing what you want with it, and potentially even selling it and getting in debt over it or something. It's crazy. Like, it just doesn't make any sense from any point of view. That's not going to work with customers, not going to work with lenders, not going to work with the justice system. Beyond the courtroom, the implications of SBF's guilty verdict resonate deeply within the crypto industry and regulatory landscape. The rapid jury decision underscores the gravity of SBF's misconduct and reflects an intolerance for the reckless disregard for principled financial stewardship. SBF's trial has also provided a stark tableau of betrayal, with former confidants turning state's evidence against him. These testimonies, especially that of Caroline Ellison, former CEO of Alameda, and SBF's ex-girlfriend, have been instrumental in sealing his fate. The intimate access Ellison had to the inner workings of SBF's empire allowed her to offer the jury a clear view of the machinations behind the scenes, ultimately portraying SBF as the architect of a grandiose scheme. The journey for SBF is far from over. A second trial looms on the horizon, bringing with it the potential for further revelations. However, his immediate future is now confined to the stark reality of a federal jail cell, where he will await sentencing. The date set for his sentencing, March 28, 2024, is likely marked on many calendars as the crypto community and its observers await the final act of his dramatic downfall. As the dust settles in the courtroom, the story of SBF is a sobering narrative of unchecked power and the perils of a modern-day Icarus flying too close to the sun. The verdict serves as a potent reminder that no matter how innovative or cutting-edge, the fundamental principles of integrity and accountability remain the bedrock of financial trust and security. In any case, let's all take a drink or two in celebration. SBF is going to jail after all. I did not expect that ending. I don't know who wrote that, but good job. That was a good read. John Deaton highlights Ripple's commitment to XRP through market highs and lows. Ripple maintains a strong commitment to its cryptocurrency XRP despite ongoing regulatory challenges. John Deaton, a crypto-focused attorney, emphasizes Ripple's responsibility to uphold the value and support of XRP. From its initial funding round in 2015 to its $10 billion valuation in 2020, Ripple has shown significant growth and investor confidence. Solana surges over 50% in 2 weeks, fueled by Coinbase and institutional interest. Sol has experienced a remarkable rally, surging by over 50% in just 2 weeks. Coinbase has emerged as a significant source of bullish pressure for Solana. Coinbase's prominence in the Sol market aligns with recent developments in the cryptocurrency space. That makes sense. Ripple secures partnership with National Bank of Georgia for digital lari project. The National Bank of Georgia selected Ripple as its technology partner to develop the digital lari, a pilot for a national digital currency. Ripple was chosen from a group of 9 potential partners based on its technical capabilities and the knowledge of its team. The NBG values Ripple's approach to scalable and progressive deployment, which promises a smooth integration with Georgia's existing financial systems. Interesting. SEC questions jury verdict for Quan and Terraform Labs, requests summary judgment. SEC challenges Terra's crypto securities claims and seeks judgment. Terra ecosystem's turmoil is blamed on internal and external factors. Terraform Labs alleges Citadel Securities' involvement in UST depegging. Interesting. Aragon Association announces dissolution amidst growing concerns over transparency and governance. The Swiss nonprofit Aragon Association is dissolving due to concerns over transparency and governance and will liquidate its $155 million ETH treasury to offer ANTS token redemptions. Aragon DAO members had expressed dissatisfaction with the association's handling of the ETH treasury, leading to this unprecedented decision to dissolve and burn the remaining ANTS tokens post-redemption. Wow. Valkyrie CIO sees spot Bitcoin ETF nod by month end. Valkyrie Investments is at the forefront, pushing for the SEC's approval of a spot Bitcoin ETF. Chief Investment Officer Stephen McClurg maintains an optimistic stance on the SEC's forthcoming response. The financial sector is closely monitoring the situation as major firms like BlackRock and Fidelity engage with the SEC. It's pretty big, actually. It's huge. All right, let's go take a look at the market real quick. Hi, Marbepte. Quan 72, MD Abdul Halim 007, Binance user CCB1F. Nice to have you guys with us. All right, let's look at so the global crypto market cap is $1.28 trillion, a 0.91% decrease over the last day. The total crypto market volume over the last 24 hours is $45.18 billion, which makes a 23.35% decrease. The total volume in DeFi is currently $4.05 billion, 8.96% of the total crypto market 24-hour volume. The volume of all stablecoins is now $40.48 billion, which is 89.59% of the total crypto market 24-hour volume. Bitcoin's dominance is currently 52.61%, a decrease of 0.05% over the day. And Bitcoin is at $34,672.72, down 0.5% over the last 24 hours, still up 2.38 over the last 7 days. Ethereum is at $1,808.52, down 0.57% in the last 24 hours, still up 2.09% since last Friday. Let's look at the biggest winners and losers real quick. The Fear and Greed Index is at 72. The biggest losers are not losing by that much today. Solana Sol is down 5.9% in the last 24 hours, but still up 24% over the last 7 days to $39.85. Flow is down 5.15% in the last 24 hours, down 1.48% in the last 7 days to 51 cents 48. CFX from Conflux is down 4.89% in the last 24 hours, down 0.57% in the last 7 days to 15 cents 19. And then the only one above, down more than 4%, other than that, is Cake, which is from Pancake Swap, which is down 4.83% in the last 24 hours, still up 21.20% in the last 7 days, to $1.50. It's a pretty clear-cut number. Let's look at the biggest winners real quick. Trust Wallet token is up 13.38% today to $1.25, up 20.55% in the last 7 days. Rune from Thorchain is up 9.57% in the last 24 hours to $3.10. And is up 31.71% in the last 7 days. Rose from Oasis Network is up in the top 3 today to 6.01% in the last 24 hours. Up 17.46% in the last 7 days to 6 cents 049. Ape from ApeCoin is up 5.55% in the last 24 hours to $1.40 and up 8% in the last 7 days. Let's go back to the main cryptocurrencies. We're the only ones up more than 5%. I'm kind of expecting to see a lot of volatility over the weekend as people have more time to play around with their trades. Usually weekends are kind of a downtrend before going back up again, but we'll see. Every trend in crypto has kind of a counter trend at some point, so it's hard to tell what's going to happen in general. BNB, $228.80, down 0.8% in the last 24 hours, up 1.27% in the last 7 days. XRP is at 60 cents 98, up 0.13% in the last 24 hours, up 10.92% in the last 7 days. Solana we talked about. For Cardano is up 4.49% in the last 24 hours, up 11.12% in the last 7 days to 32 cents 01. Doge is down 0.91% in the last 24 hours, down 3.72% in the last 7 days to 6 cents 768. TRX from Tron is down 1.61% in the last 24 hours, up 4.7% in the last 7 days to 9 cents 794. Ton from Toncoin is up 1.08% in the last 24 hours, up 8.93% in the last 7 days to $2.25. Link from Chainlink is up 1.01% in the last 24 hours, up 2.59% in the last 7 days to $11.19. Matic on Polygon is at 66 cents 4, up 0.89% in the last 24 hours, up 7.29% in the last 7 days. Dot from Polkadot is down 1.54% in the last 24 hours, up 10.93% in the last 7 days to $4.58. LTC from Litecoin is down 0.38% in the last 24 hours, up 2.17% in the last 7 days to $69.25. Bitcoin Cash stands at $238.30, up 0.28% in the last 24 hours, down 1.88% in the last 7 days. SHIB from Shiba Inu is down 0.59% in the last 24 hours, down 0.22% in the last 7 days. AVAX from Avalanche is up 1.91% in the last 24 hours, up 12.19% in the last 7 days to $11.94. I think that wraps up the news on our end right now. But yeah, SBF is guilty. Here we go, and we'll see how the actual sentencing is. Thank you guys for joining us. Definitely subscribe so you get notifications for the next shows, and you can jump on and see what's going on. Also for the interviews and sometimes some specials on the weekends. Thank you for joining. Have a great Friday and a great weekend. Bye, guys.